Tom, good to see you.
Great to see you.
Been a little while.
Yeah.
Thanks for joining us.
Pleasure.
We are here to talk about the Real Deals Upper Mid-Market Deal of the Year for Medicaid. Hopefully this is a good forum to just talk about a couple of bits that Inflexion did, you did personally, and looking to just dive into a few things, if that's okay with you.
Yeah. Tom Pemberton, I head up the consumer team at Inflexion. Been in Inflexion about 10 years. Joined from another private equity fund down in Australia. I sit on our investment committee, our realisation committee as well. And consumer for us is quite focused in what we look at. We basically invest only in digitally native brands and also within consumer technology. So within the branded side of things, we really focus in on the high growth categories where we think there is really strong international opportunities. So pets, health and wellness, and beauty are really where we double down. We selectively will look in other categories like enthusiast categories and sport. And then on the consumer technology side, we spend all our time in e-com, marketplaces, and classified businesses, and investing sort of size range, anything from about a 50 million euro equity check up to about 500, minority or majority, and across Europe.
Great. Do the team have different angles that they'd look at? So would you have someone that just covers sport, for example, or the other pets sector?
Yeah. We run quite narrow focus areas and what we call campaigns and subcategory deep dives. And within the team, each of our team members has a couple of areas that they really focus in on, based on some of the experience that they've had in the past, some of the board experience, but also, we're always coming up with new categories and new areas of focus. So then we'll have a couple of new areas that we spend time on each year.
Great. And Medicaid, in an existing kind of vertical that you're interested in, looks like, from what you're saying, a pretty obvious deal to go after, but how did it get about? What was the point of it coming to the table?
We've been doing a lot of work around the beauty space and the beauty category individually, and then deep diving into subsectors and different categories. And anti-aging skincare for us always came out as a really interesting category. And so we spent probably 3-4 years just trying to get to know people in the market. And then we were fortunate enough to meet Elliot, the founder of Medicaid, at a conference, and just built that relationship organically over a number of years.
Great. I don't know Elliot. He looks like the antithesis of the sort of modern influencer brand-led. I mean, you've gone from the Boots Protect and Perfect kind of creams that were very much like main company-led, and then businesses like Barbara Sturm that are very much tied to the name. Elliot didn't look like he was playing that at all, right?
Yeah,
it's very different.
Yeah, I mean, he's an amazing individual. So Elliot is a chemist by training, scientist by training as well. His family actually had a pharmacy, and so he spent a lot of time as a kid and growing up sort of tinkering in the back of the pharmacy. So there was a real sort of product heritage to the business. He and his brother were the ones that co-founded the business. And I think the thing about Elliot that we loved and the thing about Medicaid that really stood out is everything was product led, and it was product first. Make sure that you can bring the best ingredients, the best quality products to market, and then the rest sort of takes care of itself. So it was definitely an innovator in the product in the skincare category, and he'd built that business over a number of years. So when we met him, the business had been going for over 10 years. So it wasn't a sort of flash in the pan, influencer-led brand.
Yeah.
It was something that had built real credibility, being sold through the professional channel with proper influencers and key opinion leaders in the dermatological space that were recommending the product. And so it had that really fantastic product heritage from the very beginning. And that's the approach that Elliot had taken the whole way through. The business was completely vertically integrated. They did all the R&D in-house. And
amazing.
in terms of, comparing it to some of the other brands, it really stood out for that product differentiation.
And were they looking for investment? Had they done pre-work to have a partner like Inflexion, or was this an identification the other way around that just seemed to line up nicely.
Yeah, it was the other way around. So we spent 3 years talking to Elliot and a couple of the other execs in the business and Dan, his brother, as well. He went on a journey working out what he wanted to do and who he wanted to bring on as an investor. Obviously, given the high profile nature of the brand at the time, he was getting lots of inbounds. But we'd spent 3 years getting to know him. He'd met a large number of the Inflexion team, our value acceleration team as well. So it was for him a sort of point in his life where he was thinking which way to go. For him, he wanted to stay heavily involved. He saw the opportunity ahead of him. He wanted support on growth, on hiring, on internationalization, which is what we ultimately supported on. And so it was really that 3-year build and that relationship building that we went through to get us in a situation where he was just happy to do a deal with us when was it, end of 2020, beginning of 2021.
3 years feels like a relatively long kind of lead time up to having the conversation. How much of that time is spent kind of trying to shape your entrance into the business versus genuinely just kind of helping someone on their way?
Yeah, it's a little bit of everything. I think for founders and entrepreneurs, this is one of the biggest decisions they ever make, bringing on a partner. And so you want to spend time together, work out that you work well together, you're aligned in the approach that you take to growing businesses, because particularly in consumer, I think there's an easy option and there's a harder, more long-term option. And particularly in this day and age of digital and social media, you can grow the top line quite aggressively with marketing spend. But for Elliot, he wanted to build a long-term business. He wanted to invest in the business. He wanted to build something that ultimately would be extremely valuable over the next 5-10 years. And so we spent 3 years talking through that and talking through what it looks like to expand in the US, build out the team, focus on D2C. And so that 3-year period was really us sort of aligning on what the strategy would look like. Again, for him, a really big focus was around retaining the culture and retaining the great people that he'd invested in over the many years in the business, putting them in a situation where they could have additional equity. And so there was really a sort of long-term approach to making sure that we had real alignment on what we were trying to build.
Hopefully a good segue then. So if we get the timelines right, so we've got the founding group in 2009 and then through to the exit to L'Oreal in 2025.
Yeah.
That looks like an amazing story on paper.
Yeah.
Walk me through what you kind of entered with. What did you see from day one? What are we looking at here from the Medik8 business Inflection's first foray? Yeah,
I mean, it was a really well-built, well-invested business when we went in 2021. It was always product-led. You referenced it in the market and everyone said the quality of the ingredients, the quality of products were really strong, and the efficacy of those products, which in skincare is the most important thing, obviously, were exceptional. So we had a great foundation and there was a very strong team already in place. They'd already internationalized, they'd invested to scale up their manufacturing. The market work that we did referenced extremely strongly. So there was a platform there, but what we aligned on was there were basically 3 key things that we needed to really double down on. The first was D2C and digital, which as an organization we've done many times before, and that's a huge focus of the consumer team. Everything we do in consumer has a big digital angle to it. The second was access to the US. So they had a really tiny presence in the US when we invested. And so we made sure that we built a proper strategy around the US and invested ahead of the curve to ensure that was a success. And then the last area was around building out the talent team and working closely with our value acceleration team and our talent team. We effectively sort of brought in an extra layer of C-suite on top of what was a very strong team, but hired, CEO, COO, Chief Customer Officer, US GM, head of digital, head of sustainability. And so there was a big people build required in the business as well. At the same time, making sure that the sole focus of the business was getting the best product out to the market. And we, again, invested. There was a great platform there, but we also invested quite heavily in a new innovation center and building increased capacity there to then support the growth that we went on over the last 4 years, and the business continues to trade exceptionally well.
Yeah, great. And those three key pillars, assumedly, and correct me if I'm wrong, you would have had a huge advantage on those 3 years spent before then to work out how to move various levers and to your point earlier, to retain the culture.
Yeah.
Like how much of that really played through when, let's say, hiring that level of C-suite to make sure that you kind of got your bang for your buck for the 36 months beforehand?
Yeah. Well, it was interesting because Elliot and the team had already met a lot of our value acceleration teams. So what we did was, once the deal was signed, basically in the first 2 weeks, we sat down with our value acceleration team. We just brought on a non-executive. We were just about to hire a chair that we'd already had lined up. And we all sat down and said, what does the optimal structure of the organization look like over the next 3-4 years, and how do we build for that and invest ahead? And so we sat down and aligned on that quite quickly, which meant we were able to then accelerate the hiring plan, accelerate the sort of capability build, particularly across D2C and the US. And that was something that evolved over a couple of years of getting to know the business, getting to know the strategy, getting to know the market, and where the Medik8 brand was strong and the Medik8 product would be differentiated. And then from day one, we'd effectively already aligned on that, and so we're able to move really quickly and accelerate.
Because normally there's a bit of tension between the founder owner or the departing CEO and then the incoming investors. You don't need to reveal all, but were there any things that at the start you felt that you weren't well aligned on, or was it pretty plain sailing?
No, I mean it was seamless. It was one of those investments you'd love them all to be like that, where brilliant founder, brilliant exec team, great well invested business, and then a huge market opportunity that needed support and particularly capability build. But we'd spent that time early already aligning on that. We knew where we could add value and support, particularly with our value acceleration team really stepping in the first year. And so it was actually quite a seamless transition from founder owned to private equity. Elliot still retained a very strong stake in the business. We were able to incentivize the broader team with sweet equity as well, and they obviously made a great return on that given the outcome that we got. So no, it was one of those deals that you wish you could see every time, because it was just straightforward from the very beginning.
Yeah. Well, you've been nominated 4 times for Deal of the Year and won twice, so dare I say you might have something to do with it yourself. But let's get into the kind of value creation story for the time that Inflexion held it, and I recognise you've still got a stake alongside L'Oreal for the future. What would you say were the main bits during the journey where they're pivotal?
Yeah.
If you could repeat it everywhere, however you want to say it, what are the real bits to pin on?
Yeah. I mean, first and foremost, and it's pretty much the same underlying thread, helpful for you as well, in all of our successful investments, it's all about the people. It's all about getting the right talent into the organization early on in the investment. And with Medik8, we were fortunate to be able to do that very quickly. We had a brilliant board, a fantastic chair in Chris Elshaw. Chris Colfer came on as a non-exec, and he's got great experience in internationalizing luxury brands. We then were able to hire a fantastic CEO in Simon Coble, building out the C-suite beyond them with the COO, CCO. Our sustainability team was exceptional. And then I'd say one of the real pivotal hires was in the US, which is, as everyone knows, a tough market to hire in, particularly from the UK. But we invested really early there. So we had no presence in the US, but built a team before we had sales. And we were able to build a really high quality team based in New York that were then able to really accelerate the growth in the US. So like all of our investments, it's all about getting the right talent in as early as possible. And the nice thing about Medicate is it's such a great brand. It's such a great product-led business with a fantastic culture. We were able to get some really high-quality talent across the C-suite, including, we had also hiring a brilliant chief people officer as well. And so she was able to help build out the team as well.
Great. And people often use the term professionalizing, perhaps unfairly, for a deal like this, where it sounds like there was a lot of that infrastructure in place. But to go from founder-owned, culture-led, to being bought out by a very large, well-known business, how did you kind of get the team to level up, I suppose, for lack of a better term?
I think there's a few ways. Obviously, bringing in people that had experience from some of those larger organizations, which we did. The CEO was ex-L'Oreal. And so having some senior executives that had sort of been there and done that and seen that before, that was an element. But the biggest thing was the people that were already in the business were hugely ambitious and hugely capable. And so they had the ability to scale up as well. As all investments, there are, during the course of sort of hyper growth that Medicate went on, there are some people that don't go the whole way. But with Medicate, there were a lot of people that were there at the very beginning that are still there today. I mean, Lilia, the CFO, is phenomenal. And she was at Medicate many, many years before we invested, went through the investment with us, and now has gone through the process with L'Oreal, and she continues to just shoot the lights out. And I'm an enormous fan of her. So there were people within the organization that really did scale up, and then we were able to bring in selectively the right people across the exec.
Well, kudos to Elliot for managing to build that early doors then.
Yeah.
Useful segue, I suppose, into the exit trajectory and going to trade.
Yeah.
You've got experience of PE to PE, PE trade buyers and large corporate buyers.
Yeah.
At what point do you start thinking about this is going to go to trade, or we're going to try and angle to trade, and what sort of levers you start pulling to get there in the right way?
We do a lot of work before we invest around what does the business need to look like? What are the attributes? What are the key KPIs that a strategic will look for? And often that will be a big focus of discussion at investment committee around what does the exit look like? And, in this day and age where DPI is king, that sort of put us in a really strong position, potentially compared to some of our competitors. Over the last couple of years, we've had some phenomenal exits to strategics across all sectors. But within consumer, that's even more pronounced. I'd say our approach is always build something great and long-lasting in a subsector where there are a large number of strategic acquirers, and you should get some interest with Medicate. We knew there'd be private equity interest. It's a great business, great margins, great financial profile, and still lots of runway to go. It's very rare for you to have a process where you've got strategics in the mix where there's more than a handful, because every strategic has different internal dynamics, different funding dynamics. They might have something else going on, so they always sort of come in and out of windows. So you need to work out when the optimum window was, which is why we went when we did with Medicate. But I think the real takeaway from all of it is you've got to be thinking about exit before you sign that check, and you need to be building those relationships with the private equity funds. We've done a number of deals with private equity that we were talking to the PE funds many years before we did the deal. On the strategic side, you've got to be doing that well before. You've got to understand what they're looking for and when the window really works, and building that relationship early is the most important thing. You share some numbers, but really getting them excited about where you're taking the business and understanding that you're building it for the long term, because that's ultimately what they're focused on.
And does that help you control the narrative then? So when you're taking the deal through to private equity and going through a roadshow, and that you're going to pull the trigger at some point if the number aligns, is there a house view of trying to control that versus having a large corporate just coming in and trying to sort of bid for it early?
For us, we will always give people access if they are genuine and relevant, and give them the opportunity to move quickly, which is what we've done on a number of deals. And it sort of self-selects. Those that have conviction run harder, they do the work earlier, they get themselves in a position. And typically, because of all of that, they're the ones to put the best price, or the most deliverable price on the table. And so we do let that happen, but you want to be having discussions over a number of years. I mean, we're a private equity house, but ultimately the management team need to be comfortable with the new buyer as well. So you need to socialize that as well and make sure that there's alignment there, so that ultimately the founders, the entrepreneurs, the management team and ourselves are all pointing in the right direction, and being comfortable with the ultimate owner of the business. So we do like to do that a bit earlier, potentially, than some of the other private equity funds out there.
And you referenced in that a little bit like the tension around an exit and getting a management team comfortable. But I think one of the most pervasive issues with getting a deal done is getting a team to run business as usual and continue the growth trajectory, perhaps on which you're trying to sell the business, as well as running the exit. How do you balance that? How do you make sure a business, Nodor, for example, is going to be able to do the same rather than falling down the pit hole?
I mean, it all comes down to the depth and capability of the team. We're hiring and we're bringing in CEOs and senior execs that have run much bigger businesses, that have ideally been through a process like this before. But for us, we do provide a lot of support in that. We're not big on going extremely wide on processes and meeting every single person under the sun, which is why we do the work up front. We build those relationships over a period of time before we run a process. So we try and condense the intensity of an exit process, because we know who are the real runners and riders early, and then you can make sure that you're prioritizing time. But at the end of the day, you've got to have a really well built business. It's got to be well invested. You've got to have a good level down below the senior exec that might get dragged out for a couple of months in a process, and that ultimately is one of the big things as to why Medicaid traded so exceptionally. In fact, it outperformed budget whilst going through a process, because the next layer down and the depth in the team was really strong, whilst maybe the CEO and CFO were spending a bit more time on the process. But we do provide a lot of support, and we're very thoughtful about how we do these processes as well. You do a lot of the work up front, really understand where the questions are going to come, make sure that the bankers that we're working with are high quality and can take some of that workload off the management team, but also trying to get it done quickly and in a short, sharp window with the buyers that really should be there and you think will have the most conviction.
There's two sort of competing angles in that, I suppose, because in part, you're indexing on people who have gone through these types of events before and will likely have seen some of the things that are going to either halt a process or create chaos internally. Whilst on the other side saying, well, no, we're actually going to be very supportive and help drive a lot of that work ourselves. Those two might not be complementary, and yet clearly there's a trade line.
I think they are complementary. We're not the ones leading the management discussions and selling the story around the business, but we know how to buy and sell businesses. We do it day in, day out. We know how to run processes. We know how to do a lot of the pre-work. We know where the questions are going to come, where the hot topics will be, and just make sure we're just a little bit ahead of all of that.
Great. And then once you get to the end of a deal, like with L'Oreal, we've got to try and avoid the business being absorbed and lost and the culture being destroyed.
Yeah.
Now, you've retained a stake, which may be helpful to this, but how much do you now play a part in the integration strategy, in ensuring that Elliot's business still feels like what he created, when there's a legacy component to it? You know, how much of it is effectively non-financial?
It's a big part of it, a really big part of it. And L'Oreal have done, I don't know how many, probably hundreds of deals over the years where they've bought businesses, some of them integrated, some of them not. With Medicaid, we still own a minority stake. It's kept separate. It's not integrated. And so that culture still remains very much the same as it was before we did the deal. Elliot still sits on the board and is heavily involved. It's the same management team. So for us, that was key. And L'Oreal have been great in that regard. And L'Oreal do this day in, day out. So it's part of their DNA on making sure that they're integrating businesses over time appropriately and keeping the ethos and culture and sort of entrepreneurial dynamics that made the business great before. So that still remains, and Simon still runs the business today as CEO. Lilia, who I talked about before, stayed on as CFO. So it's as good as it can be for a strategic deal, and we still stay involved and have a significant minority stake. So we are closely involved and make sure that is and the culture in particular is retained.
If you'd have had the sense that they'd have been a bit more aggressive on absorption and pulling it into another brand or recreating it, would that have kind of changed your opinion on exit strategy?
Yeah, for sure. Yeah, for sure. I mean, we had lots of interest for this asset, and we were always going to stay involved. So, there could have been a private equity deal. There were others, non-private equity around it as well. So we had lots of options, and the biggest thing for us was we wanted to stay involved. Elliot wanted to stay involved, and we wanted to keep the business and the brand separate and retain that culture and give the management team and the exec opportunity to benefit further from the growth of the business. And so there's a structure set up to be able to give them additional equity in the business over the business plan as well. So that was a huge focus for us. We wouldn't have done that deal if we were worried about all of those things being lost.
In the context of a market which seems to be now favouring a lot of trade buyers, and there's a lot of dry powder out there from larger corporates and not just larger private equity firms, what advice would you give to someone who was thinking about strategics rather than PE to PE in this market now?
Yeah, I think it's spend time with them. Spend a couple of years getting to know them, what the strategy is, how you fit into the product portfolio, who are the key people in the organization that you need to get bought into the deal, that you need to bring on the journey, because the opportunity for the strategics is huge. They're all sitting on a lot of cash on their balance sheet, but they still take a lot more time to get a deal done than a private equity fund does. And private equity in good categories in consumer will be there, arguably probably more so now than 12, 24 months ago. So you will always have the option for PE, but if you want the real sort of knockout strategic bid, the best thing to do is spend time getting to understand who the real, top 3 or 4 strategics will be, and making sure you've built the relationship and you hit the window where it makes sense for a number of them to be really interested.
Time's an interesting answer because it's the scarce commodity, and it's a metric for private equity deal doing in some degree, right? But how do you make sure for someone who's leading a team in a deal shop can actually spend the appropriate amount of time going through something like that whilst also looking at everything else within Medicaid and everything else externally?
Yeah. I mean, that's the challenge in our job every day. But I mean, it's important. It's one of the most important things you do in your job. You want to find the best buyers for your business, and you want to position your businesses in the best way possible. So it's just something that we as an organization focus heavily on, and that's sort of testament to the DPI and the returns that we've been able to deliver to investors, particularly in the last 3-4 years where it's been harder to sell assets, and we've had a large number of big strategic exits because we've hit the right window and we know what they're looking for, and we've built that relationship and educated them along the way. So I'd say if you've got an asset that has a potential strategic buyer and you're not doing that, you're probably not doing your job properly as a private equity professional.
How much does the Inflexion structure more broadly then play into this? So the standing on the shoulder of giants, consumer team gets to learn from every other team within the group. How much do you cross information? How much of that helps you do deals and helps you make these decisions?
Yeah, I mean, it's huge. We work as a very, very flat organization. As a partner group, we're constantly sharing. There's lots of teach-ins. There's lots of sort of shared experience and shared understanding of where other deals have gone well and actually where other deals have gone badly. And we have an investment committee, but we also have a realization committee that just focuses on exits and positioning our business as best for exit. And that's not talking about the business 3 years into an investment. We're doing that basically from day one, making sure that we're optimizing the positioning and the timing of an exit. So it's shared across the organization, and successful deals like Medicate, we will do a teach-in across the whole investment team. But we'll also do that on the not so successful deals, because actually often the ones that don't go as well are where you learn the most. And so there's a real sort of approach to shared learning and education and benefiting from some of the successes and some of the more challenging situations in the firm.
So let's take your current portfolio then. So you've still got Nodor and you've got Blue Light Card. How much will you use Medicate learnings for those deals? Nodor's still, I would say, relatively early stages. How much of that starts to now infiltrate into board meetings or how you plan teams?
Yeah, it's huge. There's always, within Nodor, there's a D2C strategy, there's a US strategy, there's a big talent strategy. So there's a lot of the key parts of the investment thesis that really worked for Medicate applied to Nodor. Blue Light Card, the same thing. We hired and managed to found a transition, put in a brilliant team, big focus on technology and the digital and product approach to that business, which again was something that we did with Medicate. So we will definitely take some of the best learnings from each and every one of our investments. And we've been around 26 years, done north of 120 deals. There's always something that you can take from some of the successes, and as I said before, some of the challenges. So there's a lot of learnings from Medicate, but there's also a lot of learnings from some of the other deals that we did within the consumer team many years ago.
Well, look, the deals obviously had a huge amount of press coverage, and everyone seems to be very proud of it. It certainly comes across from what you're telling me that Inflexion and yourself personally are proud of what you've achieved.
Definitely.
And hopefully you'll share in the next kind of round of good deals as well as it continues under L'Oreal. Before I let you go, Tom, your view in the macro lens of private equity, everyone at the moment seems to be talking about it being chaos with the whole world. But your personal view, how should we be thinking about private equity of today?
It's an interesting landscape, but it's always an interesting landscape. There's always ups and downs within private equity. I think our approach and our strategy sort of stood the test of time. It's be very deep subsector focused, know your lane, know where you can add value, and genuinely provide proper value acceleration. And we have a team of north of 20 people just focused on that. And then for us, a lot of what we do is we're backing entrepreneurs. They might be first-time private equity, they might be second-time private equity, but it's finding the great entrepreneurs that really want a backer that can support them in a number of different ways. And then, as always, it's getting the right people in the business. So if you've got your strategy right within private equity across Europe, there's still lots of pockets of growth and opportunity. It's just competitive, and you've got to really do the work, particularly from an origination perspective and building those relationships like we did with Medicate extremely early, so that you are sort of the natural partner for those execs and for those entrepreneurs.
Well, it sounds like there's a pervading theme of hard work throughout this whole interview. But Tom, you've been an absolute pleasure. Thanks so much.
Okay.
Appreciate it.